record supply disruption. That's what's going on in oil that's causing the futures to spike every time there's news out of Iran. And you can see here that coming into Monday, March 9th, there was this big spike on oil futures. That's at 7 p.m. Eastern, the night before the Monday market open. Now, this continued on and prices pushed higher. Then they started to back off. And this is the dance that I think we're going to keep seeing multiple different times. And you have to pay attention to a couple things. Yes, the short term, because that may be where your trading lives, but also the long term and bigger picture levels. So I'm going to do that here on oil futures as well as the E-mini S&P 500 futures so that we can have a perspective of that relationship between oil and the ES. So I'm going to look at price action, market timing, and momentum because I'm here already and that's what I do. So let's dive in. Now you can see here on my 60-minute chart of oil futures. And as of the recording of this video, we have now pulled back and closed some of the gap higher, okay? Not necessarily all of it, and the RSI power zones are returning to the bull support power zone. Now, I'm going to get perspective by taking this out to a daily chart. As you can see, this is a very funny looking candle here because of the very long upper shadow at the moment, but we still have time left in the trading day to see how it closes. So what I want to do is bring your attention to something you can use in this moment, but also going forward as this continues to unfold in Iran. First, identify your pre-gap highs and lows. So let's go back to that 60-minute chart. And whatever your time frame is that you choose, pick one where that's kind of where you decide to find the gap. Because if you keep switching time frames, it's going to look different. So for me, it's a 60-minute chart. So the pre-gap high, the high of the candle that was the last candle before the gap formed is here at 91.53. Great. Then identify the post-gap low. Now in this case, the post-gap low is the low of the candle that forms the gap, and it has already been traded back below. Okay, but sometimes that won't be the case. Sometimes that will stay as a useful support level. So pre-gap high, post-gap low on your time frame. Then your next step is to zoom out. Again, get some perspective. Yes, sure, here we're working off overbought conditions. On the daily chart though, we have just reached overbought conditions and might be pulling back. So we're gonna have to give this some time to see, but now what I'm gonna do is sort of zoom out to the weekly perspective. So I'm going to go and pull up a weekly chart of oil futures, really squish it up, okay? And depending on how long you have been observing the markets, especially the oil market, you may not know, hey, are we at like all-time new highs or has this been seen before? Well, that's where going to a higher time frame chart, here the monthly chart helps. So this is the continuous contract of oil futures, and you can see, hey, this isn't the first time we've had oil reach $120 per barrel, right? So if you look at the high of this month so far, again, this is the March candle. It still has many weeks left in it. The high's at 119.48. Take a neutral colored line, whatever that is for you. For me, it's black. Drop it down, and then with your eyeballs, follow back and see, when did we last trade at those levels? Oh, back in 2008. Wow, okay. So this is not scary new territory where we can't possibly assess levels. We can identify resistance levels along the way. So what I do is start in the monthly chart and identify the resistance levels based on the individual candles, okay? So I'm not gonna put all of them out here, but you can see the next one would be the high of the month ending October 2008 at 146.60. Now, full disclosure, this is a continuous contract chart of oil. And oil is a futures contract that changes its front month every single month. So you want to always make sure that if you're actually trading oil, you know which contract you're acting on, okay? So this was the exercise. Now we have perspective, right? And we can still go from the monthly chart all the way back down to the 60, but at least now you have perspective of where things are at. And I would recommend doing this process every time there's a gap, especially in this situation where it's going to likely be driven by the news about the oil supply. All right, let's do the same thing on ES futures. All right, so in ES futures, this is what the chart looked like again last night into 7 p.m. when the market started opening again. And we want to identify the post-gap action. So in this case, it's actually a post-gap high, okay, because this is a downtrend, whereas oil was an uptrend. So whatever the post-gap border is, so in this case, the resistance, we had to identify. And then the pre-gap. So they're going to be the same height because the gap's going to be in one direction. So if you have resistance for the post-gap level, you're going to have resistance for the pre-gap level. So you can see here, this was a pre-gap low and a post-gap high. Both are resistance. Great. Okay. Now the market is recovering. and trying to close up this gap. So we can see that it already took out the post-gap high. It's making its way back higher with the RSI returning to the bear resistance power zone. But that's just on the 60-minute chart. Again, don't lose perspective. Sure, get those intraday gap levels from the lower time frame, but then bring yourself out. So we can see we approached the November 21st low at 6583, and today's low so far is 6584.5. That's a 1.5 point difference. That's very, very small when you consider a daily range. So even though the initial reaction to the gap higher in oil was for index futures to drop lower, they spent the overnight recovering. Okay. So from there, again, we go to a higher time frame if we need to identify support and resistance. Now, in this case, we can stay here on the daily chart, and I'm going to bring in some levels that have been really helpful. I've been sharing them in my ES Futures Outlook reports, the skinny and the mini, and they're still intact. It joins the January 28th and February 3rd highs. It was tested on February 10th and 11th, and then on February 25th and 26th. So even though it's far away from the current price action, we want to keep an eye on it because it may be useful as we make our way back. All right. So now, looking at where the action is, we have that resistance up above, and you can still come in and map any resistance levels that may be along the way. So that's my take on oil futures and the ES right now. Again, this was more to show you what to do when you see a gap so that you can navigate the next day better, whether you trade it directly or not. So if you found value in the analysis of these securities at this moment, in the reminders of the technical analysis techniques, or both, go ahead and hit that like button, and I'll catch you in our next video.